Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of YFP Planning's fee-only certified financial planners. Before we jump into today's question, I want to give a shout out to YFP Planning's incredible team that makes this segment possible. YFP Planning offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to optimize your investing plan, pay off student loans, or simply build a solid financial plan, YFP Planning will help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Dalton in West Des Moines, Iowa.
Hi, YFP. This is Dalton from West Des Moines, Iowa. Thank you for everything you do for our profession and educating on all aspects of personal finance. My question today is about side hustles and side businesses. Does side hustle income get treated any differently than personal income we get from our main jobs? And when is it a good idea to start considering an LLC or a more official business entity? Do either of these answers change if the side hustle is non-patient care related compared to what you'd recommend for a patient care related side hustle? Thanks in advance.
Thank you, Dalton, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. And a shout out to Dalton, who we had on episode 48 of the YFP podcast, Mo Money, Mo Problems, making the financial transition to new practitioners. So Dalton, appreciate your continued engagement. Tim Baker, what are your thoughts?
Yeah, I feel like we just need a button for me to say it depends. So I would say yes and no. To answer the question, does side hustle income get treated any differently than personal income from main jobs? So the way this works is, when you have a W-2 job, Tim, your employer, when they run payroll, they do a lot of the accounting of paying taxes, for the employer side of things, for the employment of you, and then also on the employee thing. So like withholding and sending in, your portion of the Social Security payroll taxes and go into different entities. So then when you go to file your taxes and, you look at your W-2, they already have reported and sent in, taxes on your behalf. So they withhold that from your paycheck. So that's a great benefit. And what a lot of entrepreneurs, business people, I would probably put myself, maybe not completely ignorant to this, but when you start a side business or you go out and work for yourself, in a lot of ways, unless you're running payroll and have that service, that's not happening. In most cases, Tim, when you look at your W-2 income, and let's just keep it simple, and you have $100,000, and say your side hustle did well this year, and you have 1099s from a different entities, things like that, and say that also equates to $100,000. The $100,000 that you made W-2 wise, in most cases, if you've done the forms correctly, that you've paid tax on that, or you've withheld tax on that already, and you sent that to the right agencies. In the 1099, unless you're paying quarterly taxes, that's not the case. So that $100,000 might have not been taxed at all from the 1099 income. So that can be problematic because sometimes it leads to people being like, "Oh, I need to send $20,000 to the IRS or whatever it is, or another $5,000 to the state." And Tim, we just went through this exercise for ourselves. We have to do this every quarter to basically send in our quarterly, tax estimates. So then at the time of tax filing, we don't have zero, taxes withheld. We have hopefully 100%, or we're 99%, or maybe we're 105%. We might get money back in terms of like what our tax bill is and what we withheld. So it is treated differently. And then you have to actually look at how you're formed. So, another question that you asked, Dalton, is like, when is a good idea to start considering an LLC? So we are not attorneys, so we can't give any type of advice, legal advice, in terms of business formation and things like that. But I will say, as a kind of a general rule of thumb that we've been given, is that an LLC is often the cheapest form of insurance. So, depending on like your level of involvement in kind of your side hustle and like what the dollars are and like what the risk and liability is, it might be something to consider. And then as you set up your LLC, you can also elect how it is to be taxed. So you can be taxed if you're by yourself as a sole prop. That's how I started Script Financial, which is now YFP Planning, as an LLC, basically a sole prop LLC. You can be an LLC taxed as an S corporation. So there's those are typically the more, or you could also be a partnership.
Mm-hmm.
So each of those entity types and then the way you tax have different, benefits. So like one would be just in like what you're filing. So if you're an LLC sole prop, the way you're going to report your income and expenses is on a Schedule C. So that's pretty basic. But for us as at YFP, we're taxed as an S corp. So we have a separate form and an 1120S that we basically report based on our K1, which is K1 is kind of like the equivalent of a W-2 for a W-2 job and a 1099 for a contractor job. So, and there's a lot of moving pieces here, but those are things that also can kind of change how the income is treated from that particular entity. So I think broad strokes here is like, I think the LLC should be something that you seek counsel on or, read about more. Tim, I know I think you've made it like a hobby to open up LLCs yourself. So you can kind of talk through your experience doing that. And when I did it in Maryland, when I started Script, it was not that big of a deal. But different states are going to be different depending on maintenance and things like that. To address kind of the non-patient patient care, I think that this really goes back to liability, right? So if I am consulting someone on their CV, like that's my side hustle, probably not a ton of liability. But then if I am selling or, say I'm compounding something, skincare or something in my garage or whatever, as a pharmacist, these are products that people, either ingest or they put on their skin. There's probably a lot more liability there. So that's where I would say, yeah, some type of formation probably is good to separate. And a lot of what we're talking about here is separating your personal assets and activities from business, and that's where you kind of go down the path of looking at an operating agreement, separate your personal, checking and savings and credit cards from business banking and credit cards, and then really being more intentional with tracking income and expenses, within the LLC, i.e. receipts. So we probably could spend an entire hour or half hour, I would say, on this topic, alone. But, it's a great question because I think it's often confusing for a lot of people that are starting down this road of a side hustle or even just working for themselves and just not understanding. This was, me, it's like, oh, okay, like I actually have to like write a check to the IRS every quarter or, to the state. So yeah, it's a great question, Dalton. I think it's definitely something that, some type of advice or counsel would be beneficial for you.
Yeah, I think that's great overview, Tim. And to your point, we've actually got some exciting content planned in 2022. We're certainly seeing among the clients of YFP planning, but I would say folks in the YFP community at large, kind of a growing interest around side hustles, different business ventures at different sizes and scope and stages. And so based on some of those conversations and questions that we're getting, we're going to be rolling out some content around, making that transition, whether it's full-time, part-time as a side hustle from employee to entrepreneur. What does that mean in terms of considerations around several of the questions, which Dalton had mentioned here, tax considerations, just general kind of business startup types of things. And yeah, I think this is an area, Tim, where a DIYer could become overconfident. What I mean by that is, and I'm speaking here from experience, your comment, it is very easy to set up an LLC. In Ohio, it's inexpensive. The form's pretty quick. You get your certificate, you file the EIN, you can open up a bank account, and you feel like you're kind of off and running. And I think that depending on the scope of work that someone's doing, that might be okay to get started. But as you and I know, you start to then get into some of the questions around, well, how is the entity going to be taxed? And obviously you get into the tax optimization strategy planning side of things, where I think a good accountant, a good enrolled agent is worth their weight in gold, right? I think especially as you get into conversations around like the operating agreement, if there's partners involved, there's important considerations there where I think a good attorney and a team can really support you. And we've got some great resources. I've talked about the partnership charter before as a book that we really value. And I would also point folks to a book that I read early on called Small Time Operator that I think does a really nice job, more of a textbook style of outlining some of the considerations for folks that are beginning to think about their own business or, again, could be a side hustle as well. So Dalton, really appreciate the question. And I think it's a good segue into the year. We're going to be having more content and information on this topic. Thanks again for listening to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. If we feature your question on the show, we'll send you a super comfy YFP t-shirt. You can submit your question by sending an email to info@yourfinancialpharmacist.com, or you can record your question by visiting yourfinancialpharmacist.com /Ask YFP. If you don't feel comfortable sharing your name on the show, you can send or record your question anonymously. As we conclude this week's Ask a YFP CFP episode, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this show. Opinions and analyses expressed herein are solely those of Your Financial Pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com /disclaimer. Thank you for your support of the podcast and have a great rest of your week.